Very good afternoon. I'm CA Dipti Jain. Welcomes you in today's webinar on tax audit. Friends, let me share with you that these weekly webinar series is the combined efforts of Income Tax Bar Association, Gujarat Sales Tax Bar Association, All Gujarat Federation of Tax Consultants, Gyaanstation and Choice Group. In today's webinar, we have galaxy of panelists with us. We have with us our chief guest for today's webinar, CA Piyush Chajer ji, the Central Council member from WIRC and the chairman of Direct Tax Committee. So welcome you with whole heart and on behalf of everyone in our today's webinar. Next, we have with us Advocate Mihir Tanna ji from Mumbai. He's the direct tax expert and representing SK Patodia and Company. There he is handling the direct tax wing as a director. We have within our organization panelist, Advocate Ashutosh Thakkar ji, the president of All Gujarat Federation of Tax Consultant, CA Pratik Kaneria ji, the Joint Secretary of Income Tax Bar Association, Ahmedabad, CA Madhuri Dhanak, the convener of Mahavir Nagar Study Circle, Mumbai, CA Maulik Patel ji, the President of Income Tax Bar Association, Ahmedabad, Ramesh Trivedi ji with us, and we have CA Sridhar Shah ji, the chairman of webinar committee of this entire webinar, which we are going to conduct this year. He is the immediate past president of Income Tax Bar Association and all dear participants. With this note, I request Ashutosh Thakkar sir, the president of AGFTC, to please welcome our guest and all participants. Over to you, sir.
Yeah, ma'am, thank you. वेरी गुड इवनिंग टू ऑल एंड नमस्कार. मैं आपको ये वेबिनार में आप सबका अपनी तरफ से आप सबको इंटरनली स्वागत करता हूं, अपना हार्दिक स्वागत करता हूं. हम एक वीक में एक ये अलग अलग से एक्चुअल में जो अपने आज की डेट में जो टॉपिक्स होते हैं, जो अपने करंट टॉपिक्स है, वो लेके हम आते हैं. आज का टॉपिक भी एक्चुअल में जो हमको एकदम रिक्वायरमेंट है वही टॉपिक लेके आए हैं, और इसके लिए अपने जो स्पीकर्स है, एक्सपर्ट्स, उनको लेके आए हैं. तो वो सबका एनलाइट आपको आप समझो भी जो अपने टॉपिक्स है, अपने टॉपिक्स के अच्छा टॉपिक्स है, तो हम उनका लाभ लेंगे. और एक चीज मैं बोलना चाहूँगा कि हमको जो हार्डशिप है अभी, तो वी केयर फॉर एक्चुअली हार्डशिप तो फॉर आवर मेंबर्स, और उसके लिए एजीएफटीसी ऑल गुजरात फेडरेशन ने रीट पिटीशन एक्चुअल में फाइल की है. आज ही गुजरात हाईकोर्ट में फाइल हो गई है. तो वी होप फॉर एक्सटेंशन एंड थैंक यू ऑल. थैंक यू वेरी मच.
Thank you so much, Ashutosh sir, and definitely through this organization, Sabhi professionals, this organizations, all individual organizations of tax practitioners which we have, gives a platform to individuals to raise their voice to the government. And जो writ petitions की आपने खबर सुनाई है, amazing work which you are doing for the professionals. Thank you. And now I request CA Sridhar Shahji, the past president of Income Tax Bar Association, to please introduce our chief guest of today's event.
Thank you, Dipti ji. It is absolutely honored to introduce CA Piyush Chajer sir. He's a distinguished chartered accountant with 25 plus years of experience and serving as senior partner at Chajer and Doshi Chartered Accountants in Mumbai. Renowned for his expertise in tax litigation and advisory. Also, he has made impactful contribution to the finance and accounting profession on both national and international platforms. He is a respected leader with ICAI and he's been member of NCCM since 2022 and will continue to serve through 2029. He is also actively shaping key committees in taxation, examination, and finance. Not truly global, his advisory roles extend globally, including technical advisor on international auditing and assurance standard boards and various South Asian accountancy federations. Beyond his professional excellence, he is deeply committed to giving back to community, serving on corporate boards and supporting social and community welfare through multiple trusts and organizations. We have a very dynamic personality and a direct tax expert with us as our chief guest today. Welcome, sir.
Thank you. Thank you.
Thank
Shall
you.
I?
Yes, sir. Before that, I would also like to recognize Pankaj Shahji, the president, and the Mr. Ramesh Trivedi ji also, and Parth Doshi ji, the secretary of AGFTC, in today's panel. Please, sir. Please, Piyush sir.
Thank you very much. Very good evening to one and all, to all my participants, all the professional brothers. Dipti Jain ji, who's doing a wonderful job of spreading gyan, spreading knowledge through this Gyaanstation and working very hard, obviously. And of course, she comes from Mumbai, Navi Mumbai, very close to us, and I've been seeing her working. Very great job, Dipti ji. The president of the AGFTC, Ashutosh Thakkarji. I could see again the president of ITBA also, Maulik Patel and his team, Pratik Kaneria ji, Sridhar Shah, the past president, Madhuri Dhanak, the convener. I could see Ramesh ji, Parth Doshi ji, and the very eminent speaker today, again, Mihir Tanna ji, who is going to cover a very important topic today's time. Obviously, when you know, somebody would be telling, do we have a time to discuss tax audit technically now? And of course, last week, last 10 days, we are getting a lot of representations, a lot of requests from the members that what is going to happen, what is not going to happen. Obviously, as mentioned by GFTC president also, that they have filed the writ petitions. I've been told around 15 to 16 writ petitions have been filed in the various high courts, which are expected to be listed. Some are been listed yesterday also, which are again going to be heard on 26th or maybe 24th and 25th. But as far as being a central council member and a chairman of direct tax committee, obviously, what was happening before 15th of March, what is happening after that, and we were in concurrent discussion. And I will just, before the benefit of the members, I would tell you that the institute had actually made its original representation in the third week of August itself to the member legislation regarding the issues which were encountered with the ITRs, as well as especially with the Form 3CD also at that moment of time. And obviously, we didn't sort any extension at that point of time. But our concern was that if those issues are not being resolved, then obviously there would be an issue for complying with the due dates, specifically from a perspective of ITR 1 to 4, which was the relevant at that point of time. Thereafter, further issues were escalated, and we were in constant touch also. And we knew that at that moment of time also, there was a talk in the corridors also at that moment that yes, we may consider looking into a tax audit extensions. But as far as ITR is concerned, we cannot tell anything right now unless and until we watch it over a period of time and what is the written filing status. So obviously they didn't did any extension, because one day I do not consider that as particular extension. But obviously they were of the belief, I believe that that's what thought process which we got is that filing is happening with whatever difficulties obviously which members have faced, which has been escalated to the highest authority. And I had in fact given a message also from the office of the institute also at that moment of time. And at that moment of time also, I was expecting that would be some consideration as far as corporate tax return filing is concerned, which is due on 31st October. And result of that, actually tax audit becomes due on 30th of September, 30 days before the corporate tax filing. Ultimately, we did after 15th of September, we decided that we should make a presentation on that after a public reach, which we got that yes, there is a difficulty being faced by the membership as far as tax audit is concerned. And therefore, on the 17th of September, we have already made a representation. And day before yesterday, in fact, we have escalated because we have raised a Google form and we got more than 1,200 queries along with the screenshots as to what are the difficulties being faced and encountered by the various members. So those etc. we have compiled it, we have signed those screenshots, and we have already sent it to the member systems also. To my best of knowledge, I expect something good to happen. Of course, I can't say anything on record on commitment, but we have been discussing with that, and I believe that some positive output should come, which members are looking forward to. So I thought I'll just give you background to what is the status of that as far as I know to that extent, and the way we have been discussing with the various authorities at the board level also, and at the undersecretary level also. Apart from that, obviously coming to our topic, Of course, I need not go into the details. Obviously, as far as the new financial statements, as far as tax audit was concerned, has been already deferred for a year by the council, considering the difficulties which were faced by the members. So obviously, we are not worried this year. If somebody is already following that, I think so that's voluntary. They can do it. It will do help the readers to decipher the financial statements in a much better manner, number one. Number two, coming to a tax audit, of course, guidance note we had already released within time on 31st of July. And there are a lot of issues and questions obviously made by would be trying to cover. My only request to all the members is that whatever issue you encounter, whether you are doing it your audits on 30th September or if it gets extended by maybe October or November, please do comply with your guidance notes. They are actually a mandatory in nature, though it may say that it's a recommendatory, but it says that if you are not complying with the guidance note, then you have to document what are the alternate audit procedures which you have followed. And therefore, it makes it as a mandatory. And it also actually ring fence the members in discharging their assurance function. So tomorrow, if you are put to the question that why a particular decision or reporting pattern has been followed, maybe an example of clause 22 in relation to 43BH, clause 26, or maybe TDS, you can always state and rely upon the guidance note that I've taken a guidance note. So you may agree with the contentions given in the guidance note or not, but I always say once it is on relation to accounting and auditing, and if you're complying with the guidance note, it has been upheld by various court of law also. For a very small example, I will tell you, just take an example how the turnover has been calculated in case of securities, futures and options, wherein actually plus and minus you are adding. You are ignoring the signs and you are adding and calculating a turnover. But at various court of law have said that if there is no specific definition available in the Income Tax Act, the guidance note which prescribes certain calculation method which is developed by an expert body like ICI, that should be followed. So my request to all the members is please do follow. Yes, I know there's a short time. My only request to members is please do comply with your audit procedures. We cannot have a shortcuts. Whether the members understand that, when I'm talking members, whether the government or the CBDT understands that it's very difficult to cover in a short period of time, I think so we cannot lag behind when it comes to applying the quality principles. Please do apply. It does not make much difference. I know I could see on the screen all our litigation experts and all will agree with me that in fact, if the audit report has not been signed by 30th September, then SSC cannot be penalized. That itself is a reasonable ground that the auditor could not complete an audit and issue an audit report. Itself becomes a reasonable ground under 271 capital B for non-imposition of penalty. I think so. So please keep that in mind. Let's not take more pressure because the quality is more relevant rather than the pressure under which anybody is working. So my request to all of you, at the same time, I do know maybe in a day or two, if you get some good news, I think so. I hope for that, something coming up maybe in 2 or 3 days max. That's what I would believe. So all the best to you. Thank you very much once again, Dipti ji, for calling me. Thank you all the other bodies of the representatives of other bodies for calling me over here. Thank you once again.
Thank you. Thank you so much, sir, for your enlightening words. And we are really very glad to know that Institute is working aggressively for this because the same question is raised everywhere we go when we talk to the professionals ki Institute kya kar raha hai. And through you, the message is very loud and clear that Institute is actively working to resolve this panic time and to resolve and working for the extension of date. And very well said ki the focus should go on quality and not to compromise on quality. Though time is less, but we should not compromise on quality. So one question, I think it can be resolved only by you with respect to the UDN of the tax audit.
Yeah,
Should I
please,
ask? Yeah,
please.
please. It's in Q&A box. Please clarify on UDN for tax audit whether we have to generate UDN under modified report or unmodified report. And if observation made is in para 5 of Form 3CD, observations are of mixed kind, like disclaimer for some point or just emphasis kind of thing for some point.
So if it's only an emphasis type of reporting or the observation which you are making in the para 5, obviously it is an unmodified report. But if it is in sort of a disclaimer, if you want to disclaim certain statements or assertions made in the financial statements or reporting in the Form 3CD, obviously it has to be decided based on our SS 700 that it has to be a modified opinion. Then you should select the modified opinion. That's all. So you have to apply the test of our audit that whether this results into a modification or it results in an unmodification. As I said earlier also, once again, that obviously only an emphasis does not result into a modification on it.
Okay. Thank you so much, sir, for solving this query. And yeah, moving ahead with our today's session.
Thank you once again.
Thank you so much, sir, for taking out time
I'll
from your
just have to quit. Thank you.
Yes. Now I request Madhuri Dhanak, the convener of Mavinagar Study Circle, to please introduce our today's eminent speaker, Mihir Tannaji, for our participant in today's.
Thank you, Dipti, for giving me this opportunity. And yes, we are privileged to have with us today a Mr. Mihir Tanna, a qualified advocate with over 15 years of experience in the field of direct taxation. He is currently associate with the SK Patodia and Associates LLP, where he has been leading the direct taxation vertical since 2014. His expertise lies in providing advisory and compliance service to a wide range of our clients on a complex tax matters. He also has been extensive experience in representing a clients in income tax proceedings, assessment, appeals, and advisory on withholding tax. Prior to joining SK Patodia, he worked with the Khimji Kuvarji and Company for 4 years, handling a direct tax profile. Over the year, he has developed a strong proficiency in areas such as the taxation of trust and the government bodies, MNC and FIS, exemption applications under Section 1046 and the 12AA, and obtaining a tax refunds. With his deep subject knowledge and hands-on experience in appeals before CIT appeal, handling prosecution proceedings, and providing opinion on taxability, he has been a trusted advisor for many corporates and organizations. With this, let us warmly welcome Mr. Mihir Ashok Tanna and look forward for his insightful session. Thank you. Over to you, Mihir ji.
Yeah, thank you so much, Madhuri. Thank you so much, Gyaanstation, for providing the opportunity jointly with the Mavic CP Study Circle. As we are approaching towards the due date, as of now, we don't have any good news for the extension, so we will assume that it will be a 30th September. And accordingly, instead of going clause by clause, I have covered only specific area wherein I feel that more attention is required. So let me share the presentation. So in my presentation, I have divided broadly in the 5 areas. One is the audit limit, which is very important to understand whether the person other than the corporates, whether they are liable for audit or not. Because in a recent period, you must have received many notices from the department wherein the department is asking for the clarification whether you have calculated the threshold limit for tax audit correctly and what are the bases and how you have calculated. So, so next, my point will be the calculation of turnover in the different criteria. And after that, I will cover the amendments which are made recently in the 3CD formats. After that, I will cover certain important, I can say, amendment which was made in the Finance Act 24 number 2, which will be applicable while preparing this, I can say, tax audit report. And lastly, we will cover the landmark judgments which are relevant for the tax auditor. To make this webinar interactive, it would be better that you continuously post your queries on the chat box and you can ask the question throughout the session. So I will try to cover it one by one once I complete particular slide. So accordingly, we can continue. So to start with, as of now, as you must be aware that there is there are two limits in under 44 AB. One is the 1 crore limit and another is the 10 CR limit. If you are able to prove that that your business receipts, whether it is a revenue or from the capital, if it is less than 5% from the cash, then you are eligible for 10 CR enhanced limit. Otherwise, you will be following the 1 CR limit, which is specified in the 44 AB. This is for the business. Similarly, for the profession, there is a limit of 50 lakhs. Certain people are confused that 75 lakhs limit is there. But please note that that 75 lakhs limit is profession is only for, I can say, only for the presumptive taxation, that is 44 ADA. For tax audit applicability, you have to cover only limit of 50 lakhs, which you should be keep in mind. Now, as I said, you have to consider receipt as well as payment, whether it is a capital in nature or revenue in nature. You have to consider both while calculating the limit of the 10 CR enhanced limit. Also, when you are calculating the cash component, whether that payment was in the cash, receipts and payments are in the cash, you should consider that bearer and cross check will also be considered as a cash transaction. However, as an auditor, it would be very difficult to understand whether or check whether it is the payment was through a bearer check or cross check. So, as mentioned in the guidance note, as an auditor, we can mention that in the absence of the proper records, we could not verify the same. Third thing, the key consideration will be the FNO transactions. As you must be aware that FNO transactions can be done only through a digital means. That means you are eligible for 10 CR limit. However, how to calculate turnover in the case of FNO will be covered in the subsequent slides. Next, last point which should be considered is the business and professional threshold should be calculated separately. In certain individual cases, they are involved in the business as well as in profession. So you have to apply both the limits separately. And if either of the limits are crossing, then you are liable for the tax audit. Now, before going to the how to calculate the turnover under different criteria, let us understand the basics, which we are, I think, reading from the since many years when we are doing a tax audit. But just to give you a quick guideline for that, that you should include the certain things like a cash discount, which is obviously a part of your business turnover, so that should not be excluded from that para. And commission on sales, that is also considered as a turnover from the business. Your securities held as a stock in trade. So if you are in the business of securities, then obviously your that inventory will be stocks, and that should be also considered while calculating the sales turnover. And rebates, which are in the nature of commission. These are the certain example which I felt that it should be considered in the slide. However, in the tax, if you read the guidance note, there are several other examples are also given, which should be covered in the turnover. Now, next, what should not be considered while calculating the limit of turnover will be the trade discounts. As you must be aware that it is already deducted in the sales invoice, and that's why it is not considered in the even penal item. Next thing will be the sales return, which is obviously it's not your sales turnover. So it should be deducted from while calculating turnover for the applicability of tax audit. And the special rebates, which are in the nature of the trade discounts, which are similar to the trade discounts, should also be excluded from the calculation of the turnover. And lastly, the scrap sales. Unless you are a scrap dealer, it's not your normal revenue from the operations, I can say. It's not a basic proper revenue, so it should be excluded while calculating the turnover. Apart from that, there are certain inclusions and exclusions which should be considered while calculating the gross receipts. Basically, when we are talking about the business, it's called turnover, and when we are talking about professional, it is general parlance. We calculate the gross receipts. So now question arises when we are calculating that 50 lakhs limit for the profession, whether tax audit application applicable or not in the case of profession. We should do include the certain items like out-of-pocket expenses recovered via consolidated bill. Like in the professional, we professionals, when we charge the client and we mention our fees as well as the out-of-pocket expenses, it is a consolidated bill which we are gross receipt, and it is not a separate. If we are considering out-of-pocket expenses as a separate invoice, then we can exclude it. Otherwise, we have to consider while calculating the gross receipt for the limit of 50 lakhs. Similarly, in certain professions, I can say we are receiving the cash assistance duty drawback from the government, export schemes included. So in that also should be included in the turnover. Reimbursement out of pockets are in the similar nature, but yes, in certain cases, we also receive the higher charges, liquidated damages, insurance claims, which should also be form the part of your turnover. Customer advance forfeited benefited from the business operation included. Whenever we are receiving the any advance, but it is forfeited, that means we are not required to give it back to our customer. So that also should be considered as a part of your turnover, and that should be considered. And lastly, in the last few years, we are hearing about the 194R, that is the perquisites. So any benefit perquisite arising from the business and profession, which are also covered in the 194R. So here also they say that it should be form part of your gross receipt. Apart from that, there is a exclusions, which are obviously I already covered. That is the out-of-pocket expenses and the advance for the services that are yet to be rendered, because that is not the business receipt of the current year. So while calculating limit, obviously you will remove that part of the advances from your calculations. After that, there is a one more point, which is on the sale procedure fixed assets. So fixed assets and investment held as an investment is also not a form part of your normal revenue recognition. So that is also not considered while calculating the profession's gross receipt. On the similar line, rent, interest, dividend, which are not chargeable as a, I can say business and profession, should also be excluded. When you are a partner in the firm and also doing a business apart from your partnership firm, you are doing some other business, so that share of profit in the that also should not be considered while calculating the limit for that particular partner. And lastly, I have covered the point of the write back amount payable to creditors. So basically, when we are saying that, when expenses was debited to P&L, assuming that it was payable to the creditor, and then later on, if we are saying that it should be written back, so that is considered on the credited to P&L. However, that should not form part of your gross receipt while calculating the, I can say, gross receipt. Let me take certain questions. Can a company falls under the profession limit? Sarika is asking. See, in my view, profession cannot be done by any artificial person. So in my view, company cannot be counted as a profession. Company cannot do a profession. Their employees are doing ultimately profession, I can say service providing the professional services. So accordingly, that limit is not applicable. Next question is whether that check transaction should be considered as a cash bank for the purpose of calculating percentage of cash transaction, in case where we have given qualification that is not possible to check if it was a cross check. So as I said, if you are able to verify it, that whether it is a, I can say banking transaction, specified limits are already, specified mode of transactions are already given. So if you can verify, in that case, it should not be considered. But if you are already qualifying, that doesn't mean that you cannot calculate. However, based on the management representation letter, you can calculate whether how much amount is in the cash and how much amount is in the bank. So ideally, practically, if you ask me, if you find it that transactions which are posted in the cash book, only that should be considered. Apart from your contra entry should be considered while calculating the percentage of your 5% of the limit. Sorry, you can, yeah. So next question arises that in case of derivative FNO and intraday, how to calculate the turnover? As you must be aware that in the guidance note, they have specified that whatever transactions are squared off during the year, and in that case, whatever you have ultimately result is that favorable or unfavorable, profit or loss, that you have to calculate. And even if that is a loss, you have to calculate in the absolute figure and you have to total it. And then you have to consider whether FNO or derivatives cases wherein the tax audit is applicable or not. So I have given in the screen, as you can see, that I have given some examples that, that in case of SIPLA, say for example, you have 500 futures of SIPLA, and in that case, amount is settled, the transaction was settled, squared off during the year. So that is already covered in the calculation of the I can say turnover. Similarly, if you can see, sorry. Yeah. So after that, I have given a certain example, like, whatever the transaction are squared off, it will be considered. But whatever the transaction, like in the third line item, I have specified the IOC put options you have available, that is open position. So that should not be considered while calculating your turnover. And accordingly, I have given a certain examples. After that, confusion arises when I have GST should be included in the turnover calculations or not, because as you must be aware that 145 asks you to calculate the income from profit and business and profession in the inclusive method, and we usually follow exclusive method in the books of account. So question arises when I am calculating the turnover limit, whether I should include GST portion in the turnover or not. In that case, it's in my view, you should not consider, because that 145 starts with for the purpose of the determine the income. So that's why that amount which you are calculating for turnover should exclude the GST. And even if you consider it in the turnover, it will have a cascading effect, because on the credit side, if you include in the sales, and again, you will include in the debit side for the expenses. So ultimately, it is not your income. So accordingly, it should not be part of your turnover. I can see one question. What is the exactly count as a turnover for a scrap seller? I think that should be normal amount which the scrap seller earning from the receiving the amount from the ultimate customers. Whatever that amount is paid to the that particular person, that will be considered as a turnover. Yeah. So let's move to the next portion of, I can say, my presentation. That is the amendments done in the recently in the 3CD report. One of the changes made in the clause 21. In the clause 21, expenditure incurred to settle the proceeding initiated in relation to contravention under such law should also be reported. Now, this issue arises because this amendment was made in the CCD because of the amendment in the 37.1. In 37.1, there is a specific mention that expenditure referred, which are in the penalty or offense, are disallowed. And recently in the April 2025, by notification number 38/25, income tax has specified that following 4 act will be considered for this clause 21, basically, which will be, say for example, if you are paying any amount to settle that contravention of the default under Security Exchange Act or Depository Act or Competition Act, so that will not be considered, and that will be disallowed in the 37.1, and accordingly tax auditor are expected to report the said transaction in the clause 21. After that, most discussed, I can say, clause is the MSME, because of recent amendment in the 43B, wherein the H clause is added for the, I can say, to safeguard the interest of the medium and small enterprises. So in that, specifically, interest paid to MSMEs are disallowed. So as a tax auditor, we are expected to report that. Apart from that, there is a specific requirement. Let me show you the specific portion of that clause only for better understanding. So as you can see from the screen that in this year, they have asked you to provide the amount of interest inadmissible under section 23. That's okay, because you have not made the payment time, so that interest is not allowable. So you have to report here, and that automatically will be reflected in your, you have to consider in the disallowances. After that, in the second point, we have to report the total amount required to be paid to a micro or small enterprise during the previous year. So question arises when all this exercise is done for 43B, and which covers only the payment which are outstanding as on 31st March. However, if you read the language of that second clause, it specifically mentioned that it should be amount required to be paid during the previous year. So in my view, you should report the entire amount which you have paid during the year to the micro and small enterprises. And in the third clause, they are expecting us to report the paid up to the time given under section 15 of the MSME Act. But now question arises, what if I have raised the invoice in the beginning of the year, say April 24, and I made the payment after the limit, whatever 15 or 45 days limit is available. So what if I paid the payment after 3 months? Whether that will be considered as a paid up to the time given under section 15? Obviously, answer is no. But if you read the next clause words, it says not paid up to the time given under section 15 and inadmissible for the previous year. So by this language, in my view, we should report all the transactions which are paid and allowable in the current year, though it is paid after the due date. So in A clause, we are expected to provide the time amount paid within a due date and admissible for the previous year. However, on the safer side, as a tax auditor, we should mention in the note that in the while reporting the amount under 22, third clause, subclause A, we have considered the amounts which are paid during the year and admissible for the previous year. So once that report goes to the assessing officer, at least that client or assessee should not face any issue. And if we are not reporting that say transaction and if you are reporting only those transactions which are paid in 15 and 45 days, then obviously that amount will not match with your second amount. Means if you total amount in the para 3A and 3B, that total should match with your amount which mentioned in the clause 2, which is the total amount required to be paid. So in nutshell, whatever the amount, if you are want to disallow, which is not paid within the time limit and by the closing, then it should be reported in clause 3B, and balance amount should be reported to the clause A, and that A plus B should match with the amount 22.2. So as I said, there is ambiguity on whether this is the requirement of the entire financial year or year-end balance. As I said, considering the words, I will recommend that entire financial year transaction should be reported. Obviously, yes, there is a administration burden on the corporates because there are so many micro and small enterprises through which we are doing the transactions, and which all the transactions should be reported. Yes, there is third concern is the lack of flexibility for the industry specific credit periods. There are MSMEs which are already facing the issue because of these clauses. Government is trying to safeguard the interest of the MSME. However, practically certain MSMEs are facing issue because of this restrictions, and this does not provide the relaxation from the renegotiation. Practical interpretation, I can say, is the disallowances which are made in the 43 applies only to the unpaid amount at the year end that weren't settled in the MSME prescribed period. Next point arises whether when certain SSCs are following the cash system of the accounting, whether this clause is applicable or not. Yes, you have to report the payment made to MSMEs. However, in the third B clause, which is the last clause, not paid up to time given and inadmissible. So in this third clause, only those line item will come, because anyways which are not paid by 31st March will not be claimed. So question of inadmissible will not arise. So if your clients are following the cash system, you have to report the amount in the second clause, that is the entire amount, whatever paid up to the time, that will be the balance figure, I can say, and whatever amount is not paid by 31st March, that should be disallowed. As rightly said in the other clause also, that whenever it is not possible for us to do verification, then disclosure should be made accordingly in the Form 3CB. Last question arises that, when this disclosure is required only for the transaction 22 clause, do I talk about transaction done during the year. What about the transaction which are already done in the last year but allowable in the current year? So as you must be aware that whenever I am making the payment, not able to make the payment before 31st March or the extended period of that 15 or 45 days in the April, in that case, that payment will be allowable in the subsequent year when it is actually paid. So whatever transaction are already paid, all already disallowed in financial 23-24, but allowable in 24-25 because of this 43B clause, that should be reported in the 26A para, that is pre-existing on the first day of the previous year. And because as you can see that in clause only B, they have removed the clause other than 43BH. So in the part para point A, 26A, they are expecting that 43BH should also be covered here only. And whatever transaction done during the year but disallowed should be reported in the point number clause 22, sorry. So just to summarize, I have given certain examples that how the 43BH will work. As you must be aware, there are 2 points. When there is an agreement in writing, that agreement should provide maximum credit period of 45 days. You cannot exceed 45 days. And in such scenario, so in the first example, as I can say that when the bill was raised and the acceptance was there. So there is an important highlight in that. There is that whenever you are raising the invoice, that will not be, your time limit will not start from the date of invoice. It will start when the your bill is accepted by the parties. So for example, if I am making the payment to MSME, they have raised the invoice. So that will not count my 45 days period. But once I receive the invoice and I accept that, yes, whatever amount is mentioned on that invoice is payable, only in that case, your time limit for this 43BH will start. So assuming that on the 20th March, I have accepted, in the first example, as you can see, that I have accepted that, yes, I have to make the payment. And we have agreed that we have to make the payment by 19th April. As there is an agreement, so yes, time limit under MSME Act will also be same 19th April. And actual payment is also done by 19th April, though it is done after end of the financial year. But it is done within a due date specified in the section 15 of MSME Act. So that will be allowed in AY25-26 itself. Next example, same 20th March, I accepted it. On the 19th April, there is a due date, but I have made the payment on 10th May. So that will be disallowed in AY25-26 and allowed in the next year, that is allowed AY26-27. In the third example, I have made the payment in the after a year, that is in the 10 June 26, then yes, it will be allowed in the AY27-28. Next point, next example, that 20th March, I have made the acceptance. On the 20th June, that is the agreed date. However, as I said, that maximum period cannot exceed 45 days. So as per MSME Act, you are required to make the payment by 4th May. But as you have made the payment by 12th to 2nd May, it will be allowed in the 25-26. However, in the same example, if we change the date, and if I make the payment on 8th May, though I have accepted, we both parties agreed to make that credit period will end up to 20 June. But as MSME Act allow only 4th May, so even if you made the payment before 20th June, but after 4th May, so that expense will be disallowed in the 25-26 and it will be allowed in the subsequent year, that is AY26-27. In certain cases, there is no agreement. And practically, when you are asking how to say that whether both the parties have agreement or not. So in my view, if in your invoice there is a credit limit is specifically mentioned in the invoice itself that you have to make the payment, say for example in 30 days or 45 days, that means both parties agreed. But if you don't have any separate agreement and your invoice also doesn't specify your credit limit, then it will be considered as a no agreement between both the parties, and payment should be made within a 15 days. So in similar way, I have explained the 3 examples wherein the 20th March, continuing the same example, on 20th March, I have accepted, as there is no time limit agreed between. So by default, it will be a 4th April will be the calculating the 15 days time. 4th April will be the due date for MSME Act. And as I made the payment of 20th March, so that should be allowed. However, in the second example, as I mentioned, that if the payment is on the 4th April, still it will be allowed in 25-26. But if I make the payment on the 10th April, that will be disallowed in the 25-26. Any questions before going to the next clause? Okay, I can see there is no new questions on the chat box. Sorry, yeah, just how to assign agreed date of payment in writing. As I said, if there is no specific different, I can say separate agreement between both the parties, and in case your agreement specified that, by this period you have to make the payment, so that should be your agreed date of payment in writing, right? So in normal parallels, I can say there is no separate agreement between both the parties, unless you have a large order or something wherein both parties agreed to, agreement is made for the specific supply of the goods and everything. Otherwise, on the invoice itself, usually that mentioning that credit period is so much or payment sheet is expected from this. Next, can you explain what is the included excluded while calculating 5% of the cash transaction? In the subsequent slide, I will cover that part, but just to give you the brief, when you are saying what will be cash transaction, so yes, there are specifically mode of the transaction which are considered as a cash. So, for example, if you are making payment through a bearer check, if you are making payment through a non-account pay check, or if you are making payment through a draft which is not properly marked to the party, so that should be considered as a cash transaction. So practically, when we are calculating cash transaction limit for our clients, what we do is that we extract the cash book, and in that cash book, when we reduce the contra entries, which is not the actual receipts of payment for the business, so we remove that part, and then we calculate the total receipt and total payment from the bank book, and then we divide the percentage to ascertain that whether that 5% limit was crossed or not. But yes, you have to calculate very carefully, because in many cases recently income tax officers are asking us to prove along with the supporting document that yes, how you calculate the limit and whether you have fulfilled the transaction or not. CA Doshi is asking acceptance by party. Yes, as I said, just by raising the invoice, you cannot say that your 45 days or 15 days limit will start for the 43PH. If that MSME person has raised the invoice on me and I have to make the payment, so both parties should agree that yes, this whatever X amount is mentioned is payable by me. So ideally, once you receive the invoice, and if you are not making any argument or dispute on that invoice amount, that is ideally considered as your acceptance. So it is very advisable that in case amount is substantial or transaction with MSMEs are huge, it is advisable that on the invoice itself you mention the date of receipt of invoice. So you will be able to calculate that on which date you have received the invoice, and if no dispute is made on that particular amount payable, so that will be considered as your acceptance. So for example, on the 20th March, I have received the invoice and I am not making any dispute. So from 21st March, that 45 days period or 15 days period will start. I hope I have cleared your query, CA Doshi. Okay, so let's go to the next clause, and that is the clause 31. on the 269 SS. 269 SS clause is included in 3CD since long, but what changes they have made is the new drop down which they have provided for the specifying the mode of receipt or mode of payment for 269 SS, SS, T, and T. So basically, the amendment is made in the clause 31A2, which you can see 11A, which is this is the extract of the 3CD form available income tax portal. So as you can see, what they are expecting us to report is the amount of each loan or deposit taken or accepted and the code of the nature of the such amount. So if you go to the government utility on the income tax portal, and as well as which also cover the transactions which are already specified. So in the drop down list, you can see this kind of options available. That is account paid check, account paid DD, ECS. So these are the drop downs available in the utility of the 3CD. So you have to select whether your loan or deposits in this form. If receipt or payment is not in this form, then you have to select any other mode. And any other mode, once you select, you have to mention, you have to type the mode of the transaction. So, in the 3CD form, in the note 1, they have specified this negative mode of payment, which I have mentioned in the right side of the slide. That is a cash payment, not account paid check, asset and liability transfer, asset and liability conversion, and journal entry. So this is a very important. Journal entries are also considered as a non-cash, or I can say negative mode of payment, which is considered as a other than the allowable modes. So as a tax auditor, if the payments are done in the positive mode, which are mentioned in the first and second row, first and second column, then you should select this in the drop down. And if it is not in this, then you have to select any other and you have to mention this modes. If it is through cash payment, you can type cash payment or receipt. If it is non-account pay, and so on and so. So this I have taken from the utility itself, that how this new requirement will be fulfilled. Lastly, interest accrued during the year and credit to deposit account is not required to be reported under this clause. Yes, though in the accounting side, I can say that when you are mentioning the amount of loan outstanding, you generally include the interest amount also. However, while reporting this transaction in 269 SS, we are not expected to include interest amount in the amount of loan accepted in the 269 SS. Any questions related to 269 SS? Okay, I will. Okay, I will continue with that. Next clause, which is changed, is the 36B clause. That is a new buyback requirement, reporting requirement added in the tax audit report, and that is because of the amendment made in the buyback provision. As you must be aware that section 46A is amended after applicable after 1st October. So as you must be aware that before 1st October 24, shareholder were not required to make the payment any tax on the buyback. However, company was paying the 20% tax as per the provision of the 115 QA. However, after 1st October, this buyback of shares will be considered, whatever amount is received by the shareholder will be considered as a deemed dividend in the hands of the shareholder, and that should be reported in the taxable portion as a 56(2)(1). And cost of acquisition will become a short-term, long-term capital as per the holding period. So for example, I have acquired the shares of Reliance, and if Reliance coming out with the buyback of shares, in that case, if the transaction is done after 1st October 24, then I am expected to report this transaction in clause 36B. Otherwise, there is no requirement of reporting. And in that also, there are, I can say, 3 portions of this section, this amendment. One is on the side of the shareholder, that is the deemed dividend portion. Whatever amount is received from the company as a buyback, that will be my deemed dividend. Whatever amount I have paid while acquiring that shares should be considered directly as a short-term or long-term loss, depending on my holding period. And company will deduct TDS in 194 at the rate of 10%. Next clause is on the 44 GST expenditure reporting, which is also added recently, but there is, I can say, a specific guidance. Guidance not also specify the certain things like question arises that on the first column when we are saying that total amount of expenditure incurred during the year, what that column should include which amount, whether it should be only the amount which are debited to P&L or which are considered the supply. So in my view, that should be only the amount which are considered as a supply, and any other expenditure which are debited to P&L should be reported in this column. That is the total amount expenditure incurred during the year. So all the expenses which are debited to P&L will come here. However, it is also expected that when you are bifurcating this two amount in the subsequent column, this remaining columns will include only those amount which are considered supply, because if you read the heading carefully, it is showing expenditure in respect of entities registered under GST. So if certain amount is not yours, I can say certain transaction is not purview of the GST, then that amount will be considered in clause, I can say column 2, but not in the 3 to 7. So broadly, this your GST reporting will be done in the such way. ICAI guidance note also specified that non-cash charges like bad debts and depreciation should not be included, should be excluded from the your calculation of this first column. However, question arises whether your provision for tax will also be considered as a non-cash item. In my view, answer is no, because that is not a non-cash item. Bad debts and depreciation are such kind of expenses which will be never be converted into cash. However, in the provision for any expenses will be paid in this future, maybe in April or May after the end of the financial year. So in my view, that should not be considered non-cash charges and that should not be excluded. So basically, how you will calculate your amount which should be reported in this second column is given by the ICAI guidance note only. So it should be total value of expenditure debited to P&L. You have to add capital expenditure, which is obviously not in the P&L. You have to remove the non-cash items. That is the, as I said, the bad debts and depreciation, which is non-cash items. And you will arrive at the reportable expenditure for clause 44. So as I said, your total of this column 3, 4, 5 should match with your column 6, and your column's balance amount will be reported. If it is in the definition of supply, then should be column in the, if you are doing with the, if it is included in the definition of supply and you are doing transaction with the person who are non-registered, then it should be included in the column 7. Before moving to the second last para of the presentation, just let me see if there are any questions.
Pratik, if you can help me here with the
No,
questions.
that's okay. I can read that question. I'm
Okay,
just reading
fine.
that. Okay, thank you so much. Yeah. Rajesh is asking if interest amount is not paid in the same year, still not to report. Yes, I think you are asking about 269 SS. Yes, in my view, that should not be reported in the para 269 reporting. Whether opening balance to be mentioned. Shweta, can you please repeat your question? You are talking about which clause, opening balance to be mentioned? Loan. Okay, so you are talking about the 26010 SS. Yes, opening balance to be mentioned in the respective column also. Nawaz is asking if a loan advance is now converted to unsecured loan, how to report that? In that case, I will suggest that you report all the transaction and the in the below the schedule. Obviously, as a tax auditor, I always suggest that you should maintain two type of report. One is the 3CD format which is required to be uploaded, and one which we are maintaining in the Excel and Word, which will be signed by the tax auditor. So what we suggest that, your 3CD format of the CBDT does not provide you to, option of giving the notes. So it is advisable that in the attachment, we upload the signed tax audit report, which was prepared in the Excel or Word, I can say. And in that, the annexure, you should mention that this amount is converted into unsecured loan. So accordingly, we have reported this in the above schedule. That will safeguard your interest. What is the, now Kamlesh is asking, what is the reporting requirement when a deposit received from the customer is adjusted against sale? Example, deposit received 15K accounted as a deposit. After a sale, 200 is completed. The final outstanding of the 25 is adjusted against the deposited and 25 is refunded. So yes, as I said, for Nawaz is also a question that you should mention directly the amount that total the balance amount is 0, because as I can see from your example that final outstanding amount is adjusted and refunded. So you should mention that amount taken during the year, amount repaid during the year accordingly. Though you adjusted, you should mention in the reporting as a payable paid amount only. And in the notes below the table, you should mention this entire explanation for the safeguard and for the better understanding of the assessing officer. So when assessing officers see your report, they will understand the context, in what context you have mentioned the particular thing. Does the provision, Sachin is asking, does the provision for gratuity, provision for bonus will come from part of expenditure, total expenditure, column 2 in clause 44? Sachin, in my view, in both cases, yes, it should form part of your column 2 of clause 44, because again, as I said in the example of bad debts and depreciation, that bad debts and depreciation is excluded because that will never form converted into cash. But if you ask me the gratuity and bonus, ultimately that will be payable, and so that should not be considered as a cash component, and it should form the part of your expenditure only. My question, client got a document from the builder, need to speak about it. Okay, Preeti, we can discuss it separately at the end. So let's continue with the second last portion of my slides, and that is the 3 important amendments, I think, which certain. Let me highlight that 3 amendments which are made in the Finance Act 24 number 2, and which will be applicable for current tax audit which we are preparing. One is the 194 IA TDS on the property transfer, because that is also usually we consider only those transactions which are in the expenses, normal business expenses, and we forgot to consider this 194 IA clause in our 40 IA reporting. So you should remember that from 1st October they have mentioned that limit of 50K, as you must be aware that 50 lakhs there is a limit. That when you are transferring any property above 50 lakhs, then you have to deduct TDS of 1%. So there was an ambiguity before 1st October 24 that whether that limit of 50K, 50 lakhs should be per buyer, per seller, or it should be aggregate. So now in the amendment, they have clearly said that that should be aggregate amount received or paid by the all parties. So ultimately, if the property deal amount is exceeding 50 lakh, then 1% is applicable. So while preparing tax audit report, you should check whether any immovable property is transferred or not, and if the 50 lakhs limit is crossed, and then TDS is deducted or not. And again, that one more thing should be remembered is that you should take index to copy also, just to make sure that in the most of the cases consideration will not be lower than the stamp duty value. However, better to check, because 1% TDS is on the consideration or a stamp duty value, whichever is higher. So as a tax auditor, you should verify that also. Another change which is affecting almost many of the listener also, that is the TDS on the partner payments. So when you are doing a tax audit, you should also check that, because this is a new provision which recently introduced. So it would be better that we comply with this provision also, and we report this in the 40I clause. Obviously, 194T cover the firms paying salary, remuneration, commission, bonus, interest to partners. Again, TDS will arise when you are crediting to partners account or when you are making payment, whichever is earlier, and rate of TDS will be 10% plus surcharge and cess only for the non-resident partner, not for the resident partner. And yes, there is a limit of 20,000 which should be followed. If there is amount paid is below 20,000, then 194T will not be applicable. And unfortunately, till now they have not considered this in the provision of 197 and 197A. Though this is not relevant for tax audit, but just a normal knowledge sharing, that yes, for 194T, person cannot apply for the lower on the TDS certificate. Last point which should be considered is that you must be aware that Traces portal is now not allowing you to make any correction statement up to the Q3 of the financial 18-19. So this year, I feel many of our client has filed the correction statement by 31st March, just to make sure that 6-year time limit is not expired. And while filing this correction statement, many of the client has made the payment of interest. So that should also be reported in the tax audit report. So please make sure that you report this transactions also. Before going to my landmark judgment slides, let me check if there is any new questions. Yes, Pritiji, we will allow you to speak once I complete this. As of now, I'm just quickly, I'm considering only questions which are mentioned in the chat box. Sorry for that. Sir, is 194 applicable financial 24/25? Yes, it is applicable. And if you want to verify, you can check the memorandum of the Finance Act 24 number 2, wherein in the last line, it is clearly mentioned that this 194C will be applicable from assessment year 25-26. So it is applicable from 24-25. Regarding book profit limit, regarding this book profit limit also, as far as I remember, memorandum of Finance Act also specified that this limit will be applicable for financial year 24-25. So you can check. See, whenever you are going, with such difficulties, I will always suggest that, I will also suggest to my team also that you should refer to the memorandum of the budget. That will clarify, all your such queries, whether this particular clause will be applicable from which financial year or assessment year. Because thankfully that memorandum clearly mentioned the intention of the particular amendment as well as the applicability time limit from where it will be applicable. So you can check that. I think I have answered all the questions. Okay, new question. Sir, if a supply is outside the scope of GST and be classified as a NA, the second column won't match. Unfortunately, there are certain clauses in which I can say totaling should match. So if I refer to that slide, that what was expected. Let me show you that slide only. So actually, that what was expected is that your column C6 and column 7 should match with your column 2. However, considering the words, the way it is drafted, unfortunately, your answer will not match, and your column 6 and 7 will not match with your column 2 reporting. Similar issue we will face in the MSME Act also, that if you are trying to match our criteria, just to give you again that what I was referring. Yes, this was. So again, in this also, some of the professionals are of the view that here it is mentioned that column in the 3A paid up to the time given in the section 15. So this should include only those expenses which are paid within a time limit of 15 or 45 days. But if you do so, your A plus B will never match the 2, and this heading will contrary to your view. So that's why on the safer side, we are suggesting that you should mention paid up to the time in the clause 3A, you should mention the amount payment which are done during the year, though it is made after 15 or 45 days, but it is allowable in the 43BH. So that should also be mentioned in the 3A point. Okay, I think questions are over. So let me cover my last slide. That is on the certain landmark judgment. So there is a Supreme Court judgment in the 2025 in case of Daimler India Commercial Vehicle Private Limited, wherein the there was a company which was doing a commercial vehicle business, manufacturing and sale of this, and ultimately they were claiming the deduction for operating and financial expenses, and which are already. However, manufacturing could not occur due to incomplete plant transactions. So plant construction was not completed. So ultimately that expenses were not allowed, considering the fact that you have not commenced the business. So ultimately depreciation and all such expenses should not be allowed. However, Supreme Court has said that yes, business setup cannot be denied merely because manufacturing didn't commence during the 11th previous year due to construction delays. So you can say that Honorable Supreme Court are also considering the substance over form, which we are facing, or I can say seeing in the various judgments, that in the case of genuine issues, that expenditure should be allowed in the same year. Next, on the similar ground, on the further depreciation claim, wherein in the case of this Sakhi Sugars Limited, this High Court of Madras allowed the depreciation, though that asset was not put to use. And the reason for not put to use was because business could not be come in due to public allegation. So what happened that, due to certain dispute, if you are unable to start your business, you are in the willingness to start the business. You have assets are also ready. But due to certain circumstances which are not in your control, then you can claim the depreciation. That's the favorable judgment of the High Court of Madras. And so ultimately in this case also legitimate business deductions are also allowed. I'm highlighting all this issue is that because I am sure that some of your client must be facing similar issue wherein they want to claim certain expenses. However, if you follow the strict language of the act, then obviously we will suggest that yes, that amount should not be allowable in the current year. So, for example, this depreciation should not be allowed in the depreciation schedule of the 3CD. However, you can give the option to the SSE that yes, though we are not allowing in the tax audit report, you can claim it in the ITR. And if the amount is substantial and you have a backing of such case laws, then definitely they should claim in the ITR, though it will be subject to litigation. Last slide for the day, and that is on the cash transaction reporting business classification. You must have read in the various social media this landmark judgment of RBNF's educational institution, wherein they have done the transaction. That was not judgment for the income tax. That was something on the other matters. However, court has given very alarming remarks on all the transaction wherein the cash payment is done about 2 lakhs rupees. So why I'm highlighting again this issue is that we are, as a tax auditor, we are expected to report all the cash transactions which are done 2 lakh and above. So Supreme Court has highlighted very important points that there should be some verification of the transaction. So for example, if you are doing any property transaction and you are going to register that property, if the registrar of the property comes to know that particular transaction involved 2 lakh or more of cash payment, that amount will be reported by the that registrar of the property. But as a tax auditor, if you are not reporting it, that will be contravention to your, and that will face again an issue, and that will be violation. So it would be better that if certain cash transactions are mentioned in the agreement itself, which are about 2 lakhs rupees, it would be better that we report in the 216 ST clause. Another confusion was is regarding certain transactions, or I can say certain activities wherein we have to decide whether it is a business or a profession. As I think one of the question also was there for the similar line, that whether particular company can do a profession or not. So in that similar line, there is a one more judgment of the Madras High Court in case of Vajra Global Consulting Service LLP, wherein the digital marketing activities were considered as a business and not a profession. And accordingly, that limit of 10 CR will apply. And accordingly, that 5% expense and receipt should be considered. And Madras High Court considered as a business and allowed the 10 CR limit. And the last case law is on the common maintenance area maintenance charges. So in some of the clients, as we can see, is that they pay the rent as well as they pay the common maintenance area. So for example, there is a big complex wherein there are so many shops. So you are paying rent to that owner of that particular complex, as well as you are paying the common maintenance area, common area maintenance charges. So question arises whether as a tax auditor, I should consider it as a TDS under section 194C or as a 194I for rent. So in that also, High Court of Delhi in case of Diamond Tree held that common area maintenance charges cannot be constructed as a rent payment, and accordingly your 194 C will be applicable, and accordingly disallowance should be made in the 40 AI. That's it for my side. Thank you so much for patience listening. And before closing, just I would also like to thank my colleague CA Shivangi Chopra, who helped me in preparing this entire slides. So thank you so much. And now I hand over again. Let me check if there are any questions in the Q&A box.
Sir, there are questions in the Q&A box.
Yeah, so I'm reading that. 1 second. Okay, sorry. So there are two. Okay, I am reading in the chat and there is only Q&A. Okay, sorry,
Yes.
my mistake. So just me complete this chat box, then I will go to the Q&A session also. 194T is applicable for assessment 26. Please check one, sir. Let me show you the memorandum only, because I think there are so many persons who are confused whether when this clause will be applicable. So let me show you the base only. Just a second, I'm just opening that memorandum part only, wherein the assessment here is mentioned. Okay, I'm unable to find that particular memorandum. Otherwise, I could have shown it. Let me check again. There is one more question. If there is change in profit due to ICDS on inventory valuation, the which amount I need to consider for computing remuneration allowed? Profit as per PNL or profit after ICDS adjustment? Yes, it should be profit after ICDS adjustment, because ultimately ICDS were introduced for calculating your income chargeable under section as per the 145. Next question by Rahul. Cash payment about 10K for the personal expense or personal asset like gold ornament, about disallowances. Yes, see, personal expense are anyways not allowable under as a business expense. So anyways, that portion is not required. It means I will say that reporting is not required for the personal expense, because anyways you have to report that in the personal expense in the section 37. So no need to report again in the cash point. Let me take questions from the question answer column. Can a company fall? Okay, I have answered. One of the person anonymous is there, his name is not mentioned. Which record should be maintained in order to prove that the amount due MSME is not accepted under dispute? See, basically nowadays in such scenarios, even question, I can say mail communications are also sufficient. So if you are saying that, nowadays not all the invoices are coming physically, invoices are sent through a email only. So if your email communication, or if you don't have, any written communication, that is okay. That will be accepted. Sir, MSME payments are not permanent disallowance, right? Yes, MSME payments are not permanent disallowance except the interest portion. If you are paying interest because of delay payment to MSME, then yes, that will be permanent disallowance. But yes, if you are talking about the payment, the principal payment, yes, it will be allowed whenever you are making payment. So even if 45 days in for 24 times, is it disallowed? Even if paid 45 days in 50. So RM, I'm talking about the example that, say example, you have raised the invoice in the April 24, and if you are making the payment in June 24, so actually you are making payment after 45 days. But as for language of 43BH, that expense will be allowed because you have made the payment before 31st March. So that will not be disallowed. Asha is asking 260 and 260 reporting whether all loans, even if obtained through banking mode, need to be reported. Yes, all loans should be reported. Maximum amount outstanding balance amount repaid should include interest also, where interest is not computed, compound and credit to same ledger. No, as I said, interest should not be reported here because that is not an loan. What mode should be chosen for repayment of loan via EMI auto debit? So that is positive list, and that will be considered as a banking only. An option, if you ask me, just a second. So you are saying auto payment. So that should be ECS only, because if you are doing automatic, so that is ECS can be selected. Sumit is asking, if you don't know the mode, then which one to select? In that case, I think it would be better that you select any other and mention that not available, and below the table you specify that you cannot verify the mode. Whether all transactions, Shailesh is asking whether all transaction is particular account is required to be reported. Sorry, Shailesh, I am not able to connect. It is whether pertaining to 216 SS or not. If you can retype your question, Shailesh. Yeah, next question. Please reiterate on the COA for buyback. Yeah. So in the buyback, I was explaining that from 1st October, there is a change in the law. Let me show you slide only just for better understanding. So as you can see from the slide, that section is amended from the 1st October 24, and earlier the shareholder was not liable to take the tax payment on the buyback amount received, and company were paying. From 1st October 24, this clause is amended. So in the tax audit report, you have to report all the buyback transaction of your client if it is done after 1st October 24. wherein the buyback amount which is received will be considered as a deemed dividend, and whatever amount you have paid for the acquiring that share will be considered a short-term loss. So in the reporting criteria, you just have to report this deemed dividend amount. I hope that is clear.
Anyone who wants to ask any more questions?
Sorry, just a second. I think there are so many questions which I have not answered. I sent question chat regarding repayment of deposit by way of adjusting against sales receivable. Can you please clarify? See, again, adjustment by against sales receivable. So basically you are doing through a journal entry. So again, that will be a negative list and you have to report accordingly. Asha is asking expenditure incurred to compound an offense under any law timing force in India, outside India. Can you please update if there is any such law as of now where we need to do reporting? Ashok, I have already covered this in my slide that by circular, they have specified the laws which cover this. So it, as of now, it covers only 4 acts. So even if, say, for example, there is a compounding application for TDS prosecution, but as of now, though it is covered as a amount paid for to settle the contravention, but it is not in the specified list of the act. It is only specified Security Exchange Board of India, Security Contract Act, Depository Act, or Competition Act. So basically, you have to ask your client whether they have made any payment to under this 4 act to a exchange or a authority wherein they want to settle the default. Then only you are required to disclose this. Yes, it is received notified. You can note down, Asha. There is a notification number 38/25 dated 23rd April 25, wherein this 30 for this 37(1) disclosure requirement 4 acts are notified. Whether late fee interest levied on delay GST PF allowed as expense, or we need to report the same in clause 21. Again, late fee or interest will have a 2 component. As you must be aware that there are either interest payment can be a compensatory in nature or it can be a penal in nature. So when you are saying that clause 21 requirement, clause 21 talks about your 40. You are talking about, I think you are talking about the interest. Okay. So basically that penal in nature is inadmissible. So that should be reported in clause 21 if it is in the nature of penal. Next question is whether interest must be included. Already answered. Sumit is asking same question. Okay, clause 31 law, do we need each transaction separately date-wise or single transaction? In clause 31, you are expected to report cumulative, not each transaction. In the back working for your records, you can keep each transaction working. So at the time of assessment, if client or officer asks, you can produce. But in the tax audit report, you have to report cumulative. Opening balance 15,000, received 20, so it is 20. Whether this to be reported? Yes, 35 reported. Ruchi is asking for reporting clause 31. Do we need each transaction separately? No. Then again, whether provision for doubtful debts, loss, etc. on sale, securities, and share transactions are also being put in column 1. If you are saying provision for doubtful debt on loss of security share transaction, again, it may convert it into cash or may not convert it into cash. So I will suggest to exclude such provision from the clause 44. Rohit is asking for clause 23, should we consider amount payment done to specified person or the value transaction involved? 23 asks you the to particular person. So yes, we have received certain queries because even if you are reporting only that transactions are done with the I can say rated party, and because of that reporting by the tax auditor, SSE has received notice that no disallowance is made in the 40A to B. However, still we have to continue the reporting specific person and not the value of transaction involved. in manufacturing company, depreciation form part of direct expense or indirect expense? Yes, it is indirect expense. Cash payment done about 10K for personal expense, already answered. 194C, yes, in my view, 24-25. For buyback, deemed dividend, what could be the cost of acquisition? Cost of acquisition will be the cost at which the shares are acquired. And a company buyer purchase goods worth rupees 40 lakhs, 20 lakhs from MSME supplier on the, just for the benefit, let me show the screen. So yeah, so I am reading this question as of now. A company purchased a goods worth rupees 20 lakhs from MSME supplier on 1st January with agreed period of 45 days. The buyer failed to make the payment till 31st May 25. From which date does the interest liability under the MSME Act starts? MSME Act start with the next day. Once you cross this 45 days criteria, from the 46th date, your interest liability will start. If buyer actually pays 20 lakhs principal, 1.5 lakhs interest MSME supplier on 31st May, can buyer claim interest of 1.5 lakhs as expense while computing? No, you cannot claim because you have made the payment a delay, and justify with reference to section. Okay. Last question for Madhurika. Donation made should be reported in clause 23. Clause 23 talk about the 48 to be payment. So how it will be covered in donation made, I'm not clear. So I think you are asking that trustee is rated party of the trust and you have made the donation. So in that, my view, that reporting is not required in clause 23. I think I've already covered all the questions. So I think we can conclude the sessions because it's already 6:32.
Okay. Thank you, Mirbhai, for the in-depth explanations with the certain points in tax audit reports. As we come to the end of today's session, I'd like to take a moment to thank each one of you for your valuable time and active participation. A heartfelt thank you to our distinguished speaker, Mirbhai, for sharing such insightful knowledge on key reporting in tax audit. Your clear explanation and practical approach have given us all a lot to think about and apply in our professional work. We are also grateful to Dipti ma'am, Gyaanstation, Choice, ITBA, AGFTC, GSTBA for their continued efforts in organizing such meaningful webinar that contribute to our ongoing learning and development. To all the participants, thank you once again for being the part of this session. Your presence and engagement make this event truly successful. With that, we formally conclude today's webinar, wishing you all the continued success and good health. Thank you and have a great evening.
Thank you.
Thank you all. Thank you, Mirbhai.